Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Hello. Good morning, everyone. Welcome to Wealth Coffee Chats. Good to see a few of the early birds up and at it already. Making sure that everything is coming through clearly. Fantastic to have you here. Welcome along, folks. Good to see you. Justin's in the house. Morning, Justin. Do the quick warm-ups while we're waiting for the old world of a live stream to warm up and people to jump on. Jason Witten's my name, if you didn't already know. Some of you know that already. Most of you do already. However, if you're new, if you're one of the newbies who might have joined our coaching and mentoring program recently, we help property investors build their property portfolios and, more importantly, keep their properties for a long time. Buy well, don't sell. That's a saying we have around here. If you're new, hello. Fantastic to have you here. Let us know. Give us a shout out in the chat. Say a quick hello. Love to hear from you. Where are you from? What are you up to? Feel free to get involved. We usually do a little bit of banter in the chat here, so which is always good to have a bit of interaction in these Wealth Coffee Chat mornings. Hey, good morning, Rebecca. Good to see you. Tim's there as well. Allison. How you going, mate? Good to see you. Tony's there. Gesh. Fantastic to have all of you on this morning. So there you go. All right. Well, listen, let's, while we're having our coffee, have a little conversation. It's an interesting thing out there in the marketplace when it comes to the world of property. A few things have been going on, unless you've been living under a rock. All of you know that interest rates have had the highest rate rises, or the quickest rate rises in Australia's interest rate history. The shortest period of time with, not the largest rate rises, but the shortest period of time the interest rates have risen over in recent times, up from historic lows, which, hey, you know, what a fun time that was. It was fantastic to have low interest rates and take advantage of them while you can. We talked about this for ad nauseum. That was not going to last. That was not normal. And now we're back to what I would consider long-term normal interest rates, or the average. And everyone's holding their breath. What are they holding their breath? What the general marketplace right now has got a few things going on: lack of supply, high interest rates, affordability, a few things going on that is really constraining the property market. But folks, the conversation that many of us have been having. We've been having it a few times here on the Wealth Coffee Chats and different places and spaces at mentoring and other things, is when, folks, when do we think the interest rates are going to go down? Because they will. What goes up goes down. What goes down goes back up, especially when it comes to Australian residential real estate interest rates. Anyway, residential mortgage interest rates, let's put it that way. Anyway, folks, what have you heard? Put it in the chat. What have you heard around the grapevine? What have you heard around the grapevine, around the town? On the grapevine, isn't it? What's the saying? On the grapevine. What have you heard on the around town? Anyway, there you go. You know what I'm trying to say. What have you heard when it comes to the interest rates? What have you seen for the info out there, the aggregated information that might be floating around? What have you seen when it comes to the conversation going on out in your world? There's Cole. Good morning, Cole. Bunty's there too. Yeah, Tim, you're onto it. You're dead right. When interest rate drops, real estate will rise straight away, and it will. And it will. There's some hidden pressures, certainly. Certainly, that's underlying it. Allison's like hoping for the end of the year. You know what? I don't know if it will happen at the end of the year, Allison, but it will. It'll be interesting to see. But you know, for all of us, we're sort of sideline commentators, aren't we? We're sort of kind of participators indirectly in that news. Tim, next year. Yep. Hey, morning, Sonia. God morning. That's good. Hey, Sonia, good to see you. Fantastic to have you here. Yeah, listen, the conversation, folks, in the circles that we move in is that interest rates tipped to drop next year, mid-2025. What's going on between now and then, team? What's going on between now and then? Well, for me, for you, if you can, I've said this for probably about 6 months now. Sam's been saying it for 12 months as well. You know, if you can, in the meantime, if you haven't purchased yet, if you haven't bought a property yet in certain marketplaces, then I suggest you get a wriggle on, folks. Get a wriggle on. Now, if servicing's holding you back, yep, I get it. You know, you'd love to buy another property, but, you know, finances, you know, causing you dramas. But there are strategies we can use, team, that you can jump the hurdle of this finance or, you know, restriction. And we might talk about that later. I better not get distracted because then we'll end up, you know, what's a strategy you can use, folks, to delay the serviceability issue and still play in the property market? Put that in the chat while we're having a conversation here. Anyway, between now and when the interest rates go down, folks, and the conversation is between sort of 1 and 1.5% interest rate drop to stimulate the economy, to get things resurrected. You know, when between now and then is probably going to be between minimum 9 to 12 months. What's going on? You're dead right, Rebecca. Off the plan, the right off the plan property in the right spot could see you 2 or 3 years down the track when interest rates are lower, finance is easier, et cetera, et cetera. So I won't talk about that today, but let's have a look at this. What's on the agenda? What's looking like being part of the future over the next 9 to 12 months when it comes to the economic activity? The guys at Oxford Economics have just released their July report, and I thought we might go through this. We love Oxford Economics. There's 3 or 4 data providers that we love here at Positive. And Dr. Andrew Wilson, we always love his stuff. The Oxford Economic guys, we like to have a look at SQM Research. If you haven't seen the SQM Research people, then you should. I might bring that up in a minute. So, you know, Dr. Andrew Wilson, SQM Research, Oxford Economics. you aggregate this information, and RP data is not too bad as well. I find their stuff a little bit off the pace, but you aggregate this information and you can have a look at what's going on as a property investor. All right, so thought we might do that today and have a little look at Oxford Economics report and what they think is on the radar for all of us as property investors over this next 6 to 12 months. SQM research. I'll pull that up and we might have a little look at that a bit later on. All right. So they're saying that the capital city median dwelling prices has risen over the financial year to a new record average, right? So the property prices are up, which we all know that's not something that that's not something we don't already know. They're talking about the rates to remain on hold, nothing we don't know already. So the idea, what happens with Oxford Economics, they grab an aggregated opinion of a bunch of, I think they said over 50 economists in Australia in their different ways, and they aggregate this data and information and create reports, which is great because that's the kind of like collective opinion. Now, opinions are just that, folks. You guys know this. Opinions are just that. However, it's good to sort of see different ways of looking at the information and data. Okay. Now, the winners just recently in the last sort of 6 to 12 months, folks, have been, or the markets that have driven sort of the growth predominantly have been Perth, Adelaide, and Brisbane, right? Perth, Adelaide, and Brisbane. Why have Perth, Adelaide, and Brisbane driven the market? Well, there's two reasons when it comes to, that. The price. Okay, so their purchase price was lower, and the rental yields were higher. Okay, so on average, the ability for someone to afford, let's say, an investment property in Brisbane or Adelaide and Perth, or a home buyer to afford something in Brisbane, Adelaide, and Perth was easier. Okay, so those markets were driven just recently as we go along. Melbourne, Hobart, and Sydney all have had slower growth for different reasons, and way we go. So if you own property in Perth, if you own property in Brisbane, if you own property in Adelaide, and pretty well, in many of the markets, what do you do right now? Let's say it's end of financial year, you're checking in, you're doing your taxes, you're updating everything. What's something that we all should be doing right now if we own properties in Brisbane, Adelaide, or Perth? Probably everywhere, but let's just say those three markets. Those three markets have done well. They've had some significant growth. What's something we should all be doing as part of our property portfolio when we create a plan? Oh, I've done something here. Yeah, you're dead right, Tim. Yep. Once the interest rates drop, yep, exactly, Joel. Exactly. Potential equity lock, absolutely. Get your valuations done. Check in with your finance broker, especially if your values have risen, and you might not notice this. Just the other day, we had a property up in Brisbane settling. We've got the one. I just had an excellent valuation come back, or one of the clients in mentoring had an excellent valuation come back. They purchased a property, a 3-bedroom apartment for $910. That was 2.5 years ago. It's just landed now, and guess what? It's in the Whitton. Guess what it came back at, folks? So 2.5 years ago, bought off the plan, by the way. 910, really nice 3-bedroom apartment in Brisbane, in a great location. Guess what the valuation came back at? Some of you might have already been in this one. I think we got about 20 investors in there, and the 3-bedroom came back at 1.3 million. 910 to 1.3 million, folks. So what do? There's time to go and maybe unlock that equity, or potentially lock in that equity that they've created, and maybe use it again, right? So the takeaway here from the update is, if you own properties in those areas, it could be time, if you haven't in recent times, to check in on the valuations, and lock in equity if possible. Okay, so don't miss out on that one. Okay, the overseas arrivals are still happening for us all. That's good news. It keeps things robust and tight. And the recent times, the last 12 months, rents have risen in combined capitals an additional 10%. So, this is kind of like a check-in. Rents have risen an additional 10%. Doesn't mean every rent has risen an additional 10%, nor does it mean that every property can have more rent. However, you should check in on your rents as well. Okay, check in on your rents, because right now the rental market is kind of peaking out. Like, it's starting to get a little bit of resistance at a certain height now. And if yours is low still, you might want to check in and make sure you don't miss out on that revenue. Okay, so time to check in on your valuations and your equity. Time to check in on your rent as well. And we have a look now. Their version of the world is they believe that the rental increases will soften, which makes sense, right? So if the interest rates come down, the average rent has gone up pretty significantly, and the marketplace is starting to sort of balk at those rents because it's pretty difficult all round, then it's going to slow down a little bit over the next 3 years. Okay, as we go. So here's a bit of a forecast from Oxford Economics over the next 3 years for some growth, and they're talking that Adelaide, Brisbane, and Perth to be, they believe are going to be the star performers when it comes to growth in capital growth in the next 12 months. So, that's a good one. But have a look at this, and this is pretty interesting. If you've got yourself a piece of, those markets, fantastic. Have a look at an underperformer right now, which is Melbourne when it comes to the capital growth. Now, it's an interesting one, because we're settling a deal down in Melbourne, Spotswood, which is a fantastic deal just now. And valuations are coming back higher than the purchase price on many of those purchases as well. I'll grab some of those. Valuations as well. So doesn't mean that the whole of Melbourne is not doing anything. It's the aggregated result of Melbourne, right? So, and we all know why. Why is Melbourne being held back? Fundamentally, it's a fantastic and amazing city to invest in. What's its biggest issue right now, folks? Tell me. What's its biggest issue right now? Melbourne. It has been for about 4 or 5 years, actually. What's its number one fundamental issue in Melbourne? High level, when it comes to its economic success. How does Melbourne become the most livable city in the world, like 7, 8 years in a row, or how many years in a row, and then all of a sudden it falls from grace, right? And big fall from grace, right? In a short term. Well, folks, land tax, yeah. Well, yeah, it is. It is indirectly, Sanjeev. It's not as much the land tax malarkey. The media love to beat it up. Now, listen, don't underestimate. Land tax is a complete fraud as far as I'm concerned. I'm with you. The average person, the difference between before and after was about $900. So, if you run for the hills based on $900 and don't invest in Melbourne because it's $900 more, then I think you need to rethink your financial decision-making processes. However, it is bullshit, Sanjeev, that they gouge more land tax than everyone else. You're dead right. Tony, you're right, mate. It's the government and more specifically the damn politicians down there. They're a bunch of muppets. As soon as they clean that up, folks, the underlying value in that city is still there. The underlying value in that city is still there. It's still the number one location or destination where overseas students come. It's, Dan Andrews, get rid of him. They got rid of him. You did right. So there you go. But anyway, this is interesting. Melbourne not having a good time. 2025, a little bit of a comeback, but it becomes, by 2027, one of the better performers consistently into the future. So, if you are sitting there at home going, where do I purchase? What do I buy? Well, if you want a momentum market, Adelaide, Brisbane, Perth are going to reward you quite significantly into the future. That's for sure. They're all going to perform pretty nicely over the next few years, no matter which way you slice or dice this thing. However, if you want a value market and, you want to buy property below the market value. Now, you don't ask a valuer these things in advance. They only look into the history, but we'll talk about that another time. Arguably you can get a discount in Melbourne based on its market value or its true market potential. And then, you'll get an uplift as well. So there's a bunch of ways to get involved in the market. I believe there's amazing buying in Melbourne right now for the right type of deal. And if you've got servicing issues now, but they will abate or change when those interest rates go down, maybe an off-the-plan deal could work for you. Anyway, there you go. What's the drill? The last 12 months have been pretty good. What are the takeaways from today? Check your equity, folks. Make sure you check in with your team, lock in your equity, and check your rents, okay? Check your rents. Make sure they're up, okay, as we go along. And if you can get hold of a market for the future, then jump on that, because when interest rates go down, the property prices will go up. The buyers that haven't purchased in the short term, right? The buyers that haven't purchased in the short term, folks, then the last 2 years, because they've been priced out of the market when it comes to finance and value, will flood back into the market, back with a vengeance. And that will drive prices again. That'll kick things on again. So if you don't want to be competing with that, if you can, over the next 12 months before those interest rates go down, get a deal done. Anyway, there you go. All right, folks. I think that's all we've got time for today on Wealth Coffee Chats. As always, give us a shout out in the chat if there's something that you want me to touch on, have a conversation on, an opinion on, etc., etc. Sometimes it's like that, isn't it, Alison? It's like I got equity there I can't get at. Damn it, But I know you're very diligent on these things, so just keep your eye on it. It'll change, and often it changes pretty quickly. That's for sure. All right, folks, that's it from me. Thanks for joining us, Wealth Coffee Chats. Come hang out again tomorrow. The finance team will be doing Finance Fridays. So Kang up and at it for finance tomorrow. So make sure you join him. But as for today, done and dusted, folks. That's it for now. Take care. Remember, this thing's a marathon, not a sprint, folks. Buy well, don't sell unless it's strategically. No, I nicked that from Andy Fenton. Anyway, there you go. All right, folks, that's it. Adios. Bye-bye. Have a good one. See ya. Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team here at positivementor.com.au.